Let's look at the bond market. We had a secondary trading on federal government bonds rising by 62% last week to the tune of 141.7 billion naira. Now, the government recently came out announcing that the restrictions on foreigners to hold bonds for a year has been lifted. That takes place on the 1st of July only. Is this just a positive sentiment around this removal of the restriction?
Yes, absolutely. I think it's a game changer for foreign investors, more especially, because now they can come into the bond market and participate in, from the short end to the long end of the yield curve. And we think that it's going to increase attention in the bond market, and it's going to increase activities as well. So we should see a lot more inflows coming to Nigerian government bonds.
Which tenor of bonds are we seeing particular appetite for at this stage?
Pardon, can you repeat the question?
Which bonds in particular are we seeing particular appetite for at this stage?
I think the bonds with the most appetites are, below 7 years. So we've seen a 50 to 100 basis points increase in or decrease in the yields rather from 3 to 7 year bonds, and we think that the pressure on those bonds should continue to rise in the short term. My own expectation is that the decrease should generally increase from around 100 to 200 basis points more in the medium term.
There are, of course, some political risks that could scare off foreign investors. We had terrorist attacks recently, yet another terrorist attack yesterday, killing 3 people, 25 people killed over the weekend. We also have inflationary risks. Are these 2 risks that we need to take heed of, given the demand that we've seen from international investors recently falling off slightly?
Yes, I think generally the risk factors has increased recently, but what the federal government has done is they've tried to beef up security on that front to ensure that the economy as a whole is safe for people to move around. But I think generally in terms of the yields and the premium on the yields that we're seeing in Nigeria relative to other frontier market sorts of compensates for the additional risk factors to a large extent. So we've seen government bonds from 3 to 5 to 7 years trading at pretty decent double-digit yields, and I think that we're going to see a lot of foreign investors increase their activities in the market, and the attraction should start to increase regardless of the risk factors.
Let's look at appetite from the retail sector for bonds at this stage. They're prohibited really because of the capital cost of investing in bonds, but there have been calls by the NSE to enable retail investors to trade on the bond market. What needs to happen to enable this?
I think a very good enabler for retail investors in the bond market would be to invest through bond mutual funds. I believe for retail investors to take care of the liquidity risk and liquidity constraints from bonds investment, especially in Nigeria. A mutual fund, I would say, it's an appropriate way to enter the market.
Shuaib, what are your expectations for trade now? We've seen the NSE falling off slightly yesterday, but we have seen an uptick in appetite for banking stocks, particularly rescued banks. How are you positioning your money at this stage?
Absolutely. I think you're right. We've seen the NSE decline by 40 basis points yesterday, but I think it creates an opportunities for bargain hunters like ourselves to come back into the market. We're seeing a lot of stocks across the banking sector and the food and beverage sector trading at a significant discount to their fair value. So we're starting to look at 1 or 2 companies on the exchange which we're starting to put in our portfolios, and we think that over the medium to long term it should all go well for our portfolios and for clients generally.
Which stocks are you seeing a buying opportunity then in those sectors?
I mean, in the food and beverage sector, I would say my preference there is flour mills. Flour mills obviously controls around 50% market share. They're the #1 flour miller in Nigeria. They have a solid management team, good earnings potential as well. And I think over if you look at the pure numbers, the projected P and their dividend yields are pretty attractive. On the banking sector, we like First Bank and we also like Sky Bank. We think that their loan growth should increase. Their asset quality has also improved, as well as their efficiency, and we think that they have a pretty good management team which should lead the recovery and the increase in their bottom line over the medium term.
We had the list. Let's look at broader market developments that could impact trade on the stock exchange. We had the list for ministerial candidates coming out yesterday. Has there been any reaction from markets to this list and the fact that we have slightly more clarity on the cabinet?
Absolutely. I think the ministerial list generally has been received positively by the market. We've seen some technocrats on the list. For example, Ngozi Okonjo-Iweala, who is the current managing director for World Bank, has been penciled down as finance minister. And we think that her experience, having held the position from 2003 to 2006, where she was a key element in the debt write-off for Nigeria, that experience should come to bear. We've also seen some pretty good names that obviously would increase confidence in the market, like the immediate past finance minister as well. He's also on the list, and the immediate past petroleum minister is also on the list. So we're generally confident. We think that the combination between technocrats and politicians, the balance is quite good, and we think that that should help the macroeconomic confidence in Nigeria.
There have been some concerns, though, that petroleum minister around corruption. Is this something that is a concern from your side?
Yes, I think, what the petroleum minister said, that these are allegations. Obviously, the allegations haven't been proven, and the president is quite confident that overall her work on the job has been pretty good. I think her track record is also fairly good, and I believe that the president is looking to give her some additional time to finish some of the measures she started, like the petroleum industry bill. Hopefully she can see that bill through, which should be good for the markets, I believe.